The broadcast is now starting. All
Uh-oh.
attendees are in listen only.
Hello, this is Joanne Obata, Vice President of the International Model Stock Investment Club of Sacramento. Welcome, members and guests. We are a better investing model club open to the public. All of our meetings and stock studies are virtual, allowing us to have members from the US and around the world, including Canada and China. Guests, as observers, you will be muted during the meeting and will have an opportunity for questions and comments once the meeting ends. Any companies represented today or presented today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. This meeting may mention products or services not endorsed by BetterInvesting or the club. The views expressed are those of members and do not necessarily represent those of BetterInvesting. This meeting is also being recorded and will be posted to our YouTube channel for future use. Also, we have a guest today, our club mentor, Carol Fine. She is our Puget chapter president. She is a director on the NAIC board and West region manager. She will be observing our club operations and then giving us some feedback later around 6:30. I'm going to pass it on to Tom Loftus now for our portfolio management report, and then we'll go to Ready for the treasurer's report. And then following that, I will be doing an educational topic on adding the SSG to my iClub. Tom, are you ready to take the screen?
Yep.
Okay.
So do you see my screen?
Yes.
Okay. So the portfolio review has been sent out to everyone a couple of times. A couple of things to mention is just that our diversification on small companies is a little low. We'd like to have 25%. We only have 14%. And also our mid-size is a little low. We'd like to have 50%. We only have 37.2. And as a result, our large companies are so we have too many, so we'd like to get this down, this 48.2 down to 25%. The other thing to mention is that we started off whenever Mike Torben presented this to us in January at 6.6, and our portfolio, the total return has improved to 14.6. So that's a good thing. This has been sent out to everyone, and the actions have been integrated into the agenda. But I just wanted to go over one slide here where we have some questions raised as to why they're showing up as cells, but the stock mentor is thinking that these are good companies. And so there's the screens in the value section, and the stock has to fail the 3 screens. So the first screen is the total return greater than 14%? And Schwab, Comcast, Domino's, eBay, QYLS, all have, and Disney, all don't make the 14%. So that's the first hit against them. Their projected PE, is it greater than or equal to the estimated PE that whenever the stock was, the price was forecast? And again, all these projected PEs are in excess of the high PEs. For the third test, as Bernard talked about the PEG last month, you want to keep it less than, you'd like to buy it at 1, but if you could get it up to 1.5, it's a deal. But all these companies are exceeding the PEG of 1.5. Relative value, like 120 is, as stocks, but these are even outside the 120. But we used the screen of 100, and again, all these companies fail. The upside downside, we all know how hard it is to get a 3. All these companies fail that test. So that's why they all show up as sells. So I hope that helps people
I think,
appreciate.
yeah, I think Domino's, maybe it doesn't matter, but the projected PE is less than estimated. Does it have to fall into all the categories or?
Well, again, it's close to,
Okay.
it's greater than or equal to. Same with QYLS, but they're very close to that PE. So that's why it's failed the test. We get a little bit of a margin around the. Any other questions? So Reddy, you can start your presentation.
Okay, I'll give the screen to Reddy.
Okay, I have a.
Tom, I think that. Oh, never mind.
I have looks like.
Tom, I thought that was good information.
Okay, thank you.
I will be brief, and the rest of the slides you can go through in case I run out of time.
Reddy, you have to accept the screen sharing. Do you see that?
Oh, okay. I have too many screens here. Okay, I did. Can you see my screen or?
Yeah, just your desktop. We need to see your. There you go. Thank you.
The desktop is small. I try to see the biggest screen. Okay. Okay. I'll be quick. Important slides are in the beginning. This month, the overall summary is represented by this slide. John Catterson announced last month. I marked as following the meeting date, and he's not paid out yet. Amount owed is $3,051. We deposited $100 per member, total of $1,300 without John Catterson. So we have 13 members. No new purchases, no sales. Cash balance after the deposit is $1,500. The membership status on the iClub, I do not know who has a permission to change it, but should be changed to reflect John Catterson's withdrawal. Also stock assignment.
Reddy, I have a question. I hate to bother you, but you say that John hasn't paid out. Do we? You're not talking real money, right?
It's not real money.
This is a virtual club. How could he?
This is a virtual club.
Okay, well, how would he pay it if it's not?
Bernard, we didn't in the past. We never paid people when they left the club virtually. So we ended up having a very large balance. So in a real club, when someone leaves, you typically pay them out. And so we didn't do that. That was my fault. I was the previous treasurer. And so going forward, I think it was decided that when someone leaves, we'll hypothetically see what they owe and then remove that from the balance. So we're not
okay, but it's all okay. So it's all just virtual.
Yes.
Yeah, thank you.
Okay, thank you very much.
Thank you, Henny, for clarification. Yeah, I think we are trying to follow closer to a real club with the actual contribution, so that it will be more realistic. So the current balance is $1,518, and hopefully we will deposit another $1,300 today. We'll have about $2,800, so we'll be short a couple of hundred that we can discuss during the meeting. Membership status should be updated, and the stock assignment, there are a couple of missing names should be updated. I do not know who has the permission, maybe Henny.
Yeah.
This is a summary slide. Yeah, this is a summary slide, and this one is the it shows the current balance of 1,518. This is completely revised picture compared to a couple of months ago, because we've changed the rules and the contributions, and the cash balance is reflective of the changes. This is the cash balance summary. Deposit, I already went through this. These are the slides directly from club, and this changes. Our cash balance became, where is it? It's a broker is a small amount now, which is good. We are almost fully invested. Last month we bought Irobot. I think it shows up here. Irobot somewhere here. Here it is. This company size diversification, as Tom said, we are probably some short and small. We can increase that going forward. Sector diversification again. Hello? Yes. Yes, sorry, interruption. These are all available on the club, and this is the club performance index again, and this is the status of percentage ownership. I sorted this one with the people who are owning the largest percentage. I think G and Joanne and a few of the other members are probably long-standing members. So this reflects how much each person has been contributing. This is the current portfolio gains. Again, this is sorted according to the percentage gain.
We need to
yes.
we need to move along here. So
okay, this is done. This is the last slide.
Okay.
And
right.
somebody, I think Annie, who has permission, and John Catterson used to assign. Please help me fill up these numbers, Irobot and other things. Okay.
No problem.
I done.
Isla has Narinda has eBay. I think Isla has iRobot.
Yeah, I'll sort it out offline.
Okay, thank you. Okay, thank you, Reddy. I'm going to take the screen now to give my quick educational piece on, let's see, my iClub. Okay, so everybody has my iClub. You log in and you go to, this is how to connect your SSG to my iClub. So you go to my account, go to establish BI link. Okay, so I'm already linked, so I'm going to unlink. Then you put, and this is important to remember, you put in your BI username. It's not your my iClub, because what you're doing is you're linking to the BI system.
BI, yeah.
Okay, so you establish the link. Okay, so then it shows you what your BI number is there. And then the next thing you do is you go to your stock watcher assignment. Let's see, so I'm going to go home, go to reports, my assigned stocks, and make sure. So if you click on, so I've been assigned Algonquin, that's my stock, and everybody has, if you go to my assigned stocks, you'll see your stock there. Then if you, once you're hooked up to the BI, it shows all the stocks that are SSGs that you've done. So I actually named one AQN My iClub. So that's, and this, the last time it was generated was today. So then you just submit that, and then you can go to, let's see. Oh, before that, this is like Reddy was showing, this is where everybody has their stocks assigned. So that's when you, and then when you go to my assigned stock, that's where it'll show up. So you don't have to, if you update your SSG, the same one, whatever the ticker is, and then name it like My iClub. Every time you update that, it'll automatically update on My iClub. So,
Joanne, just a quick question.
Yeah.
So if we change the assignments, then obviously people have to link their new
Yes.
assigned
Yes.
stock, right? So they'll
Yeah.
have to go through this again. Okay.
Let's see. I want to see. Okay, so if we go to, say we go portfolio review. So it shows here who has submitted their on the reports. Like Hanny, you need to do the Comcast. Matt needs to do Disney. Mina needs to do Domino's Pizza. And once you do that, it'll automatically fill in the so where the prices, where it says projected relative value, estimated, these are all your judgments. So, and then it does the calculations for you. So I think that might.
Just a question for Tom Loftus. Does this help you at all, or do you still have to do the spreadsheet that you do every month?
Yeah, Ray and I still have to do the spreadsheet.
Okay.
Hanny?
Yes.
If everybody links it, it's so simple, and just to do it, and whenever they want to revise, just click it. It's so easy. If everybody revises and their dates will show up here, it's much easier for Tom Loftus to do the portfolio review, because he doesn't have to wait for individual emails to come in. He can go to the website and collect these and do the portfolio.
Okay. Understood.
Okay. Okay. Let's see. So that was my
Can I
quick.
say one thing though?
Sorry.
So just one thing. So we only link it once, but I think what we found out yesterday is every time you do a new report, you have to hit that submit button. Right?
No. It'll automatically. So mine. Okay. So my assigned stock. Every time I update this, it'll give this a new date. I don't have to come in here. It'll just say since it's already hooked up to the Better Investing site, it sends it over. So you don't have to hit the submit button every time.
Okay. I thought I had submitted my Facebook, but it wasn't updated yesterday. Now it is.
Okay. But did you have to do the submit button?
Yeah, I had to select the correct one. Maybe,
Was it the same? Was it the same name, or was it different?
No, because every time I every time I do a quarterly study, I give it a new date.
Okay, that's why you have to do this. I mean, you can do that, but like I just keep mine as the same name.
Then how do you know which one's the most recent?
Megumi, what you can do, Megumi, is just print a PDF and then update the SSG. So if you want a record of the old one, just print a PDF and keep it in the on the club drive under the appropriate quarterly tab.
Yeah. So okay. So but every quarter when we do our report, we should keep that same date, same file.
It's the same name. So I don't date my one that gets assigned to My iClub. I just call it the ticker name and then My iClub.
Oh, okay.
Okay. Yeah, we also discussed just putting our initials after it so that when you have like a million of them, you know which one's yours.
Yeah.
We can. Yeah.
Okay. Okay. So are we ready to move on? Any other questions? And then I can discuss this later if anybody needs assistance. I'm happy to help. Okay. All right. So now we have our reports. So what I would like people to do is just give like a 2-minute comment on their quarterly report. I know there are some buys, but most of them are holds. So before we just used to comment on the buys and sells, but I think we need to start getting people to participate and at least share with the group even if it's a hold, what's going on with the company. So are you ready, Tom?
Yep.
Me, Amazon?
Yep.
Okay.
Okay, so Amazon had earnings come out at the early August or the end of July, and they were very good earnings. The street was looking for 12.30, and it did 15.12. So whenever you look at the sales growth projections, it was 27.2, and then the earnings per share growth was 46.8%. There is some concern about everybody's going to go back to the stores and buy at the stores and give up on Amazon, and you can see that maybe in the share price. The share price has 52-week between 37.73 and 28.71. It's at 32.98 at the close today, and we bought it at 32.32. So for people looking to get into Amazon, this may be a time for them to get into it. Amazon has benefited from the bricks and mortar stores being closed, and but they really get their money, and what is able to fund them to be able to deliver all these goods to our homes is the large margins they got on advertising and on the Amazon Web Service. So that's their high margin. So while the another commentary in the research is a lot of people think that people will give up on Amazon and go shopping but they're suggesting that probably the bricks and mortar stores are going to have trouble getting their products in, and they'll go back to Amazon because they've been happy with the performance. And Amazon is putting lots of effort into building out their supply services so they can get the 1-day speedy service that everybody's looking for. So as far as Amazon in the portfolio, it's 5.5% of the portfolio. It's a large company, so it's pushing us to the 48.5% limit, where we'd like to be down at 25%. It's in the consumer cyclical sector, and we only have about 13% of our money in that sector. And they also have a new CEO, and he's with the company was doing before. Any questions on Amazon? I put it down as a buy, but I'm not sure with the constraints we have of paying out.
Tom, what's the PE?
The PE is 57.37, but the average PE for Amazon is 88.2. So it's really relative PE is only 65, and the PEG is 1.8, which is greater than 1.5, but it's very close to 1.5. So it's a rich company.
Yeah, thank you.
Thank you.
Reasonable.
Thank you, Tom. Megumi, did you have any comments? Is she mute? She's muted. Megumi, do you have any comments about Amazon?
Sorry, I was muted. Just a quick question. Are we combining the mega and large sectors?
Yes.
Okay, all right. No, I think our large is too big, so.
Okay.
No.
Thank you. Isla and Reddy, are you ready to present BMRN?
Sure. Okay, so I don't really have anything to show.
Oh, you don't need to show anything.
Okay.
I don't know. Yeah.
Just a quick, quick report. So we know that BMRN is a biotech company. They specialize in very ultra rare diseases. They have several commercial products out there that they're making money for, but they're having a bit of trouble getting some other things going. One of the diseases that they're looking at and working on is severe hemophilia A, and they were told by the FDA that they had to go back into their clinical trials. They had to prolong the clinical trial and give them more than 2 years worth of data. So although a lot of analysts were expecting them to get approval from the FDA for that last year, that isn't happening until maybe next year. They had positive earnings, positive operating income, net income, and earnings for quarters 1 and quarter 2 this year. However, management is projecting that they're going to have net losses for quarters 3 and quarter 4. So it's a hold. Questions?
Reddy, do you have a comment? Reddy, are you muted, self-muted? So I want the stock watcher and the peer reviewer to each comment on the stock that they're following. Reddy, are you there? Okay.
I think he was on the phone or.
Oh, okay. All right. Next is Comcast. Actually, Mina is not able to attend, so will just be you, Hanny, giving us a quick status.
Should I comment as the peer person as well? I can.
Sure. Well,
I have a double personality.
Yeah. Okay.
No.
The Jekyll and
Okay.
Hyde.
Yeah. So the earnings report for Comcast was very positive. Management is optimistic about the future. The internet. So Comcast has a number of businesses. There's internet, cable, theme parks. They have some movies, NBC, Sky Sports or Sky in the UK and Europe. So the internet component contributes about 35% to the stock price, and so there's two sort of opposites going on. Internet subscribership is up because of 5G, and cable is down because people are cutting the cord. So those two things kind of balance out. But they continue to lose a large number of video subscribers, but they are gaining high-speed internet. So again, it's a bit of a balance. I think the spend for the high speed is probably a little bit better margins than the video. So I think in the long run that will be a positive. They also, management warned of elevated costs related to the delays in the reopening and pre-opening of sporting events. They also have some high costs for MBC's new theme park in Beijing, but both of those things are, there's some headwinds right now, but they're positives for the long term. So that's another positive. Another positive is that debt is being reduced, especially during this period of low interest rates. And the Sky business unit, Sky Sports, which has a lot of the soccer events in Europe, the UK and Europe, and regular sort of television. Olympics, but sponsorship was down and number of viewers was also down. So that's a bit of a negative. So overall, not bad, but the total return based on the high PE is about 8.3% per year, which is below our target for the portfolio for 15%. And so again, I think that we might want to look at the portfolio as a whole and see, if it makes sense, which companies we want to sell in order to get a total portfolio return that exceeds the 15%. So I would be okay with either holding or selling. That's it. Questions?
Sorry, I muted myself. Isla was
Haney?
Yes, Bernard.
Isla. Oh, sorry. Was BMRN a hold?
Yes, I think she
Yes,
said.
it's a hold.
Okay, go ahead, Bernard. Bernard, did you have a question? Okay, Bernard.
But I thought Haney did a great report.
Thank
Yes.
you, Bernard. You're up.
I'm here. What?
You're up next to give your comments about
Okay.
FAF.
Okay. I'm hoping. Oh, okay. I have to maybe. I didn't have it on my screen. I didn't
No,
know.
you.
Okay.
Okay.
Let's see if I can find the damn thing. If you guys got it for me, I'd be good.
What do you?
Here's FAF. I got this here on. This is in Google Drive. This.
Bernard, we just want a quick
And I'm seeing.
2-minute overview. A quick overview. You don't. It's not a detail report.
Okay. Well. All right.
You speak
Well,
to it.
the company is growing its sales. It's growing its earnings. The insiders are buying. It's looking pretty good. I think I get the total return of 18%. Now, but Haney feels that I'm overrating it. I say it's a buy, and Haney, I think, says it's a hold.
Okay.
But that's a brief report.
Okay. Thank you, Bernard. So it's a buy or hold. Okay.
Oh, thank you.
I would say it's
Thank you,
it's undervalued. It's undervalued, so it's a potential buy. But again, it just depends. I think what we should do is look at the portfolio as a whole. We have a lot of large companies that are not going to grow at a very high rate, and we are short on small companies.
Okay.
So if we want and they're also the percentage that of makeup of some of these large companies, we're oversubscribed on some of them. So I think rather than look at these stocks individually as buys or holds or what have you, we should do a strategic portfolio analysis, figure out which ones we sell that are not growing as fast and what do we buy so that overall the portfolio is growing at 15%. That would be my recommendation. So if you look at any one of these in isolation, a lot of them you could make an argument to buy them.
Okay.
Yeah.
And I think that's what Tom Loftus is doing. He's doing that whole portfolio assessment, and that's where he flags those particular stocks to help balance the
No, not really. So what we're doing in the portfolio analysis is looking at which ones to sell, but I think we should look at the percentage makeup of each company. So if you have Amazon and it's like say 10% of the portfolio, just as an example, and it's going to grow at 3%, and then you have another company that's maybe 5%, but it's going to grow at 15%. You do an analysis in totality and look at what is the potential growth rate based on the percentages of each holding and the growth rate.
So Hanny, if you look at we sent out a motion, and what we suggested, rather than you're talking about a strategic on the whole portfolio, we looked at it on more of a bite size, and that's why we set up this for September. We study the communication sector and look at get the stock mentors and do a study against them, and do we have the best ones in that sector, and we move on in the next month to another sector. But
okay.
We could you're part of the first group, and we could explore more there in those sessions.
Sure.
Okay. Megumi and Jane, Facebook. Are you ready to give your quick assessment of the quarterly earnings for Facebook? I think you're both muted.
Spending due to the economic recovery. Hello?
Yes, we can hear you.
Hello? Can you hear me?
I can
can
hear.
hear. We can hear
Yep, we can hear.
Megumi. Megumi,
Oh.
we were able to hear you. You go ahead.
Okay. Okay. So Facebook exceeded their performance, exceeded expectations. They had higher ad spending due to the recovery of the economy. They had increased users both on a daily and monthly basis. More businesses, small and medium businesses, are shifting to online commerce, and all of that resulted in a total revenue of an increase of 55.6% year over year. In the earnings call, Mr. Zuckerberg spoke about focusing on development of tools, especially video capabilities for the creator community, which are artists, writers, podcasters, because now video accounts for nearly half of all time spent on Facebook. He also talked about continuing to help small and medium-sized businesses grow by providing better targeted ads to find new customers, and all the way through making payments. And then he talked about expanding the virtual reality social platform. And the larger goal here is to create a virtual environment called the metaverse, which was very interesting, where people can, he said, the way he described it is where people can be together in digital spaces rather than looking at digital spaces. As far as the outlook, they project that advertising revenue will continue to increase because they raise prices, and so it'll increase through 2021. They anticipate regulatory headwinds from the platform changes and also the government, and this will likely cause overall revenues to decrease. Expense forecast remains the same. They continue to invest heavily in technical and product talent, infrastructure and consumer hardware related costs, and capital expenditures such as data centers, servers, offices, etc. And Value Line provides a positive outlook for Facebook through mid-decade. So my analysis came out, SSG analysis came out to a buy, but because I believe we have a 15% position in Facebook, I recommended a hold.
Megumi, would you recommend selling some of it? Not all of it, but some of it?
Yeah, we could, like you said, depends on what we're trying to do, what our goals are for our overall portfolio. Because we're too big on the large size companies, so we'd have to compare, well, what else is in there?
Right.
Yeah. So.
Okay.
That's all I have. I don't know if Jane has something to add.
I went through the ratios Megumi did, and I generally agree with it. And I did the previous peer reviews in the previous quarter, but this quarter I haven't done it. But then based on my recollection, I think Facebook is doing well, especially in the pandemic period. I think his service and products are highly demanded. And I think the price is getting there. It's reaching the 12-month highs. And I think if we want to take some profit because of the portfolio management consideration, we could do that. But it's still a good company. And I think the price is still very reasonable. We can continue to hold it.
Okay, thank you, Jane.
Thanks, Jane.
FleetCor, Jay and Matt.
Okay. Matt is running late.
Okay.
So FreeCore has hit all-time highs in revenue and profits. So they have moving past their pre-pandemic baseline. So they have a couple acquisitions. One of them is they acquired an insurance company to extend their lodging business into the insurance vertical. So we're anticipated the revenue and profit growth to see that growth next year. So also in June, they finalized the acquisition of a associated foreign exchange company. It is for their payment solutions. So they are for their payment solutions. So they may be making a couple of changes. One of them is a fuel card. They are going towards digital. Everything is so you can. They are investment fuel cards form of digital TVs, radios, Facebook advertising. So they are driving about 50% or more visitors to their website. So this is the fuel card business. They also want to do the same thing for their corporate payment business. So they are using their fuel card user interface, which right now they have about 100,000 clients. They want to transform into a broader payment platform. So another exciting thing about this company is the electrical vehicle. Even though this may not see in America, in Northern America yet, but in Europe, especially the cases they're presenting was in UK, how they are reimbursed. They are reimburse employees for refueling, recharging the electrical vehicles. So it looks like that this EV opportunity offers much higher merchant discount rate for payment processing. So they showed some examples, some data in this aspect. As for this quarter, their total organic growth is 23%, has very strong rebound. In the last couple quarters have reported since COVID, everything was negative. So finally, I've seen very good numbers. Fuel went up to 19%, corporate payment 32%, toll is up to 9%, and lodging business up to 39%, and a gift is 22%. So they are this is a really good quarter for them. And I went up to see what analysts gave them for next 5 years projections, all around like Zach, Yahoo, Morningstar, all giving about 15 to 18%. I also found some news actually not on their website. It was 3 days ago. So find out that Federal Trade Commission is suing this company for charging customers, hidden fees for their fuel cards. I'm going to read a bit more about that, and I can give you guys, if I find out more, I can share the information with you guys. Even though SSG shows as a buy, upside down ratio is 3-to-1, but right now what we have in our portfolio, we have about 4% of this company. Interesting enough that this company, the Morningstar shows as a software infrastructure, but if you look at the value line, they categorize this company as a financial services. So, but they have a lot of technology behind the scene to drive their business. I definitely the stronghold, and this is a medium-sized company. I think, as I mentioned, even though SSG shows buy, we don't not necessary to buy. So definitely it's a stronghold. Questions?
Jay, are there any questions?
I have a question. I have a question. Do you know if I know when the FTC announced that they were suing them, as you said a few days ago, from what I read, this is the second time that they're suing them on this same issue. They had sued them before, and the courts told them on a technicality they couldn't do it. So it's not that they didn't do it, it's just that they're going to try to sue them again. Do you know if their stock price recovered? Because their stock price had dropped a little bit when FTC made their announcement.
I didn't see drop. That was just 3 ago. You are correct. The article that I posted, it was 3 days ago. I did not notice any drop at all.
It was small. It wasn't, you know, it wasn't a 25% drop. It was some
Yeah,
tiny
yeah.
thing.
Mm-hmm. This is the second time suing the same issue as before.
Yeah.
I did not notice the drop. 3
Yeah,
days.
I think it was very tiny. I think most people who believe in the company just believe in the company, and they probably think they're going to be able to overcome this FTC thing.
Right.
Jay, I don't own this company, but as my financial advisor, would you recommend that I buy it at this point?
You know, we actually have a couple very interesting stocks in our portfolio. IRBT, Irobot, and another one I'm presenting to the club at the trade desk. They have a 10-to-1 split. This one, how much is it? $260 a share right now. You got the money, go buy it, Henny.
Okay.
So about give you 14% return at this moment based on the projection.
I remember when I first joined the club, you and I did this company.
Yes.
And I bought it.
It was your idea. Yes.
I bought it and then I sold it, and I should have hung on to it. So.
Oh, I
anyway.
kept it. I still have it. Yeah.
Okay.
Okay. Thank you.
Mm-hmm.
Thank you, Jay. IIPR, ready? Are you there? Oh, did he leave? Did Reddy leave?
No. Oh. Okay, ready.
Okay.
Unmuted.
Yes.
Okay. Give us a quick overview of IIPR. What's happening in the latest quarter?
Yeah, I looked at all the analyst reports you sent today, the latest ones, and the ones before the weekend. IIPR status remains the same. I recommend hold. Couple of them, I don't know, Schwab is very, very pessimistic, but others are good, and we cannot expect any better growth than what is IIPR is doing. But looks like analysts are worried about changing the bylaw, the federal government rules on bank loaning system and things like that, liberalizing the use of the regulations. But I recommend hold, and it's a good, and growth cannot be better than 50 to 100%. Okay, and they are 100% leased properties. They are doing extremely good, and we should follow through.
Reddy, did you look at so their business model is they build cannabis warehouses, I guess, growth warehouses for cannabis companies, and they lease them. They also put in a lot of the equipment that's required into the lease so that these companies who have difficulty getting loans from banks and so on in certain states,
Yeah. Yes.
so they do that through this leasing from IIPR. Did you get a chance to look at any of the quality of the financial stability of these companies that are leasing? Because if any of them get into financial difficulty, then not only do they have to lease the facilities to a new tenant, but they have to somehow recover the capital that they had loaned these companies, right?
Yeah, I reviewed the latest analyst reports, Henny. All the leasing people, 73 properties, they are doing good. They have good returns, and there is a 10 to 16 years lease commitment. and their financial position is doing good so far.
And Hanny, as a peer reviewer, I looked into their top 10 companies, and they're the top cannabis growing companies in the industry. So they're they're reliable companies that they're leasing to. So the chances of them defaulting or having issues with their, I guess, leasees is minimal. I think their biggest concern is the federal regulation, and due to the 16 whatever lease average lease term, that I would say for the next 5 years, 5 to 10 years, we're okay. But I think we should keep a close look at what's happening with the federal regulations, because that'll be a big impact to this company.
Okay, thank you.
So Reddy, did you say hold on this?
Yes.
Okay.
There was one buy recommendation, and others are 2 or 3 are hold, and there was Schwab is sell, but Schwab is very pessimistic.
Okay. Irobot, Isla and Jane, Irobot.
Okay, so Irobot is still has great market share in all of its locations. One of the problems with Irobot is that their competition is pretty much weighted in very large companies who make lots of other things, and so they don't report very much on what their particular vacuuming robots do. And then their other competition, smaller percentage, are private companies, and they're not doing that well. So Irobot is doing very, very well in terms of their market share. The problem is their vacuum is about 80+% of their revenue. And right now they're trying to move their manufacturing facilities out of China. They're trying to establish them in other parts of Southeast Asia. Additionally, so there's a lot of money going into that. Additionally, last year they received a benefit in terms of they didn't have to pay the tariffs coming from China, but they do have to pay those tariffs this year. So their earnings for this quarter were significantly impacted by the amount of money they're spending on moving their facilities and on the tariffs that they have to pay. So even though they're still selling a lot, they still have a lot of financial issues that they have to rectify. So it's a hold right now.
Thank you, Isla. Jane, do you have any comment?
I agree with Isla. I think it's a hold for now.
Okay.
I don't have further comment.
Okay, thank you.
Sure.
Chris, QYLS. Is Chris here? Yes. Hi, Chris. Can you hear me? Jay,
yeah, also like.
Good night, sir.
Yeah, we can hear him.
Wait, can you guys hear me?
Yes, we can hear you.
And I was gonna say, and they've been meeting their guidance so far of 12%, year over year. But the stock just seems very overvalued, as you can see from their relative PE of 135%, and their compound annual return is 4.5% using average PE, as well as only 9.7% using forecast high PE. So for me, it's a hold, and I looked at a lot of analysts, and the majority of them also would put the stock as a hold, with some as a sell, and then even fewer as buy. So yeah, either sell or hold. But my position would be a hold for the most part. Yeah.
okay.
And I guess there's an interesting thing to note is that they're still like trying to expand and acquiring like new technology. But yeah, it doesn't seem like it's reflected in terms of their stock price, I guess. So yeah.
Jay, do you have any comments on QYLS?
QYLS, yeah, QYLS is a small company. I want to give some time for this company, see if they have anything interesting see if they have some rebound. I feel like we need to be patient with this company. Also, if we read, I know the compound annual return is not that exciting. What we can do is maybe do on the second round when we do the portfolio management that Tom suggested, look at by industry, by by size, maybe see if we have any other companies in this area to challenge.
Okay. Okay. Let's see. How about Schwab? Piero and Chris?
Yep. Joanne?
Yes, I can hear you.
Okay. Yeah, I can talk a little bit about Schwab.
Yeah.
Okay, Schwab today is selling at about $74, I think. Anyway, it's I think it's a hold because it's a nice stock. It's displaying a number of characteristics. It's displaying a kind of growth characteristics, mainly because of the TD Ameritrade purchase. It's showing characteristics of being a value stock, and it's being showing characteristic of being a momentum stock, but primarily momentum stock right at the moment. Now, Value Line, I was looking at their report, their latest one was July the 16th, I think it was. They're saying they're expecting this year earnings per share at about $3.10, next year at about $3.40. And but beyond that, they see problems. There could always be problems because of the acquisition of TD Ameritrade, the integrating of the two cultures. You know, when you start hearing about problems integrating the two cultures, that's when you have to kind of really wonder about getting out. Okay, so the market right now likes it because it's bulked up in size. Because Schwab is a bank, it's a brokerage house, it's a wealth manager, and it's a wealth investment advisor. And the limits or the dividing line between these kind of activities are all blurring. So size, in that case, size is a big plus. And they like the fact that Schwab became larger with the absorption of TD Ameritrade. So, you know, I think right now the potential annual rate of return on average PE is about 4.4%. On high PE, it's about 7.9%. So average is about maybe 5%, 5.5, something like that. But you know, interest rates not right now are zero. Now, the interesting thing about Schwab is that it is a bank. So if interest rates begin to go up, then they earn a lot of interest, a lot of income on the money that they've lent out.
Piero, we're getting feedback.
Yeah, I'm getting feedback. I don't know.
Okay. Well, thank you, Piero. We'll move on. You have it listed as a hold.
Yeah, I would say it's a hold right now.
Okay.
Because I have a top price at about $100 bucks.
Thank you. Christopher, do you have any comments?
No, I agree with Piero.
Okay. Jane and Isla, Vertex.
Vertex, the price hasn't been doing well, but then the revenue is doing extremely well. The revenue has increased significantly this quarter, and also the management has raised its guidance for the 2021 revenue by about 16 to 19%. And the price is not doing well, so the relative PE and so that means it's 60% lower than 40%, more than 40% lower than average PE. So the price is extremely reasonable. And so based on my SSG, the upside downside ratio is 6.8 to 1, even based on rather conservative projection for sales and EPS. And however, I think now the investors are a little bit concerned about the pipeline. I think the revenue has increased because one of the medicine is a biotechnology company. One of the medicine is doing extremely well, either in US or outside US. But then this drug is treating cystic fibrosis. And this drug is not only applying to adults, but also applying to children. And they have got the approval for children older than 12, and they also got approval for children younger than 12, from 6 to 11. So the market demand for this drug particularly is good. But besides CF, the cystic fibrosis drug, besides this drug, the pipeline is still cooking. But then the investor may not see that, immediate success for anything soon. So they are a big concern, and that dragged down the price. But I still think this is a good company, and they spend tons of money in R&D, and I even though it's hard to tell when anything will come out significantly being approved in the future, in the near future, but definitely in the future. So if I have money, I will put into this company. But I think we need to look at a portfolio as a whole and see whether this is a company we need to buy in again, because we have invested twice, I think. But it's a good company and the price is good. That's all for me. Any question? And the current price as of today is 191. And some of the reputable investment bank, they are looking at 317 as a price target within 12 months. But we don't know, because it really depends on their pipeline, how soon the drugs in their pipeline will materialize. So really, there's an uncertainty,
Jane, is there any way to get sort of news or information on how the clinical trials are going?
Any ways of looking at? Basically, I will look at their quarterly report, and also look at some of the reputable investment banks analyst reports. So I don't have any particular way to look at it other than quarterly report. I think most of the investment banks, they look at their quarterly report to gauge what they have in the pipeline. But for me, I recommend a hold, because I think we already purchased twice. But
right.
Yeah.
Well, from what I have read about this company, they have a lot of things in the pipeline. They, as she said, primarily cystic fibrosis, but they're also working on pain. They're working on sickle cell disease, beta thalassemia, type 1 diabetes. They're working on a lot of things. The only thing is, all of those candidates are in phase 1 and phase 2 trials now. So they have to finish that, and then they have to get through the phase 3. And it's going to be a little while before anything actually shows up for them in terms of those particular medications. But they do have a collaboration agreement with CRISPR on treatments for beta thalassemia and sickle cell disease. So that might feedback. So that might show up earlier.
Okay, thank you.
So I agree. I definitely agree with Jane.
So I guess a lot of these drug companies are kind of hit or miss, right? So if they make it, you make it big, but you don't really know.
There are millions of them, actually. I mean, not millions, but there are many, many, many biotech firms, and all of them are working on the new things are ultra rare diseases and mostly cancers. So they're not working on the big ticket items like cardiovascular disease or diabetes or stuff like that. So you don't know if they're going to make it.
Thank you.
We cannot hear Joanne. So I think this is it. It's our August reports. And you want to
Oh,
carry on?
can you hear me?
Oh, there you go.
Sorry.
Yes, now we can hear
Is
you.
Carol there?
I
Carol
am.
is
Thank
here.
you, Carol. We would like welcome your feedback so far, because I know you have to leave,
Okay.
right? Because and we're trying to improve on our reporting. So initially we were doing in-depth reporting, and we would run out of time, and then we would just do buys and sells, reporting on buys and sells. But now we're trying to do an overview of each of the stocks so that we get an idea. See, as we have quite a few holds, we still want to know what the status is and how the stocks are doing for the quarter.
Okay, so my first question is, so between August and September, you'll cover all of your companies, and then what happens in October?
Well, they're
You'll go
based.
back to the
They're based.
August company?
Okay, so in September we have these are the next reports are coming up: Disney, Algonquin, Disney, eBay, Franco
Right.
Nevada. So I'm not sure what so these are based on the earnings reports. So when
That's what I wanted to know.
yes,
Okay.
so the next one comes out would be Q3.
Yeah,
So,
we would do a more detailed portfolio report today. It was a bit rushed.
okay.
We would also do education topics.
Okay. So yes, I probably would have appreciated hearing, seeing an actual stock study. So for me as an audience member, I could tell definitely that you all study your stocks very well. You understand what the companies do and what are some of their growth drivers, or that they're improving their profit margins. I loved hearing all those stories. But as an audience member, it was really hard to just look at the agenda the whole time.
Okay.
So I don't know if, you could have people submit, like, here's the, top 3 positives about the company, and, the top 3 concerns about the company or something,
Okay.
and have some extra words, or, have a little bit, some little summaries or
I
something.
see.
Might help.
Yeah.
Anyway.
We've been struggling with how to make the meetings efficient, but also
Sure.
be educational. So that's a good point. We'll have to work on how to make it visually more interesting.
Right, because I kept on wanting to see SSGs of all these, and I understand that you don't want to get bogged down.
Right.
So maybe each person just does one quick slide, and if they have a quick thing on some part of the SSG they want to highlight, they could put that on their slide. I don't know.
Good
just
point.
ideas.
Yeah.
Another thing we can do is just insert, we all fill out and we have a template, quarterly report template. I guess we can insert like as a link so that guests can click on it. Kind of like Matt used to do it. I don't know if that make any sense.
Okay.
We do fill out
Yeah. So
well, maybe as a handout even, right? So you have the agenda as a handout, and you have we could put the SSG PDF as a handout, or a short summary as a handout.
So the other thing I'll have to say is you have a few unique companies I didn't know, and sometimes you referred to them only by their ticker symbol. So I had to go look them up and see what the actual company name.
Okay. Another good point. Okay.
I will point out for your audience members that might be in clubs that your IIPR is a REIT, and it's not recommended in general that sometimes the accounting gets difficult for clubs holding a REIT. So just kind of a caution for clubs on that.
And is that because of the taxes?
Yeah.
Yeah. Okay. So one of the questions that we had is, are we to define a virtual club? And one of the reasons why we're virtual, we are no real money club. We use virtual money, pretend money, is because of the taxes and the currency exchange, because we do have international members. So, and also members from all over the United States. So to avoid having to deal with taxes, and that's how we can do the REIT.
Okay, can you pass me the screen real quick?
Sure.
So back on the Mike Torbenson portfolio review,
Uh-huh.
I don't remember him teaching one of your screens. So I just pulled up a SSG. This happens to be my Schwab SSG.
Okay.
I'm much more conservative than you all. But anyway. So one of the screens you had was that the upside downside ratio should be less than 3, that becomes a flag, 3 to 1. Yes.
If it's less
than for a sell.
Yeah.
For a sell.
Yeah.
Okay. And if you look at like a PERT report, the portfolio evaluation review technique, they will only highlight something as a potential flag if it's less than 0.5 to 1. So this, where you have your zone, so I was very surprised by the 3 to 1. That would say your upside downside ratio is way down here at the top of the green. So I would question that. I don't think that all of those should have been flagged, that would be a flag as a potential sell. The upside downside ratio should be 0.5, not 3.
Okay. Okay, we'll look into that further. Thank you.
So double check that or send me the quote on why Mike thinks 3 to 1.
Okay. Tom, can you help with that? Well, Tom can help with that.
Yeah, I'll do that.
Okay, thank you.
All right. So I wanted to point that out. And then I will say I'm really excited that you are using the My iClub and linking your SSGs. I've been working with that myself lately. And I think you'll find it very useful. And I think you'll find some of the other portfolio reports in there very interesting. You know that my model club is right after this. I'm doing a little talk on some of the portfolio reports. And I'll be highlighting that there. So I'll say the portfolio, I believe it's the defense report, shows the analyst consensus estimate, not just for EPS, but also sales, which is kind of cool.
Mm-hmm.
So I think you'll like a lot of the portfolio reports once you get all your SSGs linked in there.
Great. Well, thank you, Carol. Thank
welcome.
you very much for taking the time to observe our meeting and giving us the feedback. We really appreciate it. That's one thing we're trying to work on is getting mentors that are more experienced for our club. Since we're a fairly new club, we like the ability to have good mentors help shed light.
Great idea.
Yes.
Glad to do it.
Very much. Okay, I know you got to run because your meeting starts in 15 minutes.
Right. Now I'm the one who starts the meeting, so I need to go for other people.
Thank you, Carol.
Thanks.
And sorry,
Good night.
it was rushed because we wanted to get to you.
All righty.
All right. Thank you.
Thank you,
All
Carol.
right, have a good evening.
Thank you.
Bye-bye.
Okay.
Bye.
Okie doke. Okay, now we come to club business. And just a FYI, for September, we have reports Algonquin, Disney, eBay, Franco-Nevada, and Domino's Pizza. And then we're having a stock study. Well, actually, we're having an educational piece on solar energy, it looks like, and then a stock study with on the communications, the Comcast, Disney, and Facebook. And that would be Hanny, Matt, Megumi, and Tom Loftus.
Shouldn't we have a stock study on solar companies if we're going to have an education topic on solar? No?
We can do the next. Well,
Hi.
Yeah, where is this all? Is this on the agenda? Where what you just said? I don't see it.
Yeah.
I see September reports, but I don't see stock study
Above.
There's no stock study. Is there a stock study?
Oh,
I think
none.
we're going to do portfolio thing. Hey, Henny, things you ask. Actually, Schaefer is my friend. He works for solar industry. I don't know. I'm just have ideas. Okay, should we learn about that industry, green energy? How do they make money? I would like to get some feedback from you guys. What do you guys want to know? Do you think it's necessary? It's
Yes.
helpful to have a, okay. So I'm going to send you guys an email. Maybe you guys can give me some questions. What do you want like to know
Well,
so that I can?
like one of the things that we do that we could do better, I think, is when we come to do stock studies, is if we understand the industry a little bit better, what are some of the metrics that drive profitability? What are some of the generic metrics that the companies in that industry use to, to run their business? Then when you do a stock study, you can compare different companies and you kind of understand, what drives the, so, for example, utilities, right? They have a lot of debt because they have a lot of infrastructure. So debt is a normal thing, and there's certain debt ratios that are acceptable for utilities. So trying to understand those kinds of metrics for each industry would be useful. So if this gentleman has experience in solar, that would be really good. But I just think it would be even sort of more useful if we did a study. Although I think you're probably right, Jay. If he described the industry, then the following month we could use whatever he gave us to do a study of that industry and pick some specific companies to look at using those metrics that he might provide.
Mm.
Does that make sense?
Yes, it does.
Sorry, I was rambling a bit, but.
No, I got you what you want. And anyone else, if you have some, you want to know more about this industry.
So, yeah. So it's a stock study none, and then under that it says September communications. What is that? Is that a sector study?
Yes, communication sector, yeah. Because, and one of the—
I think that's a strategy we're going to talk about next, right?
And
It's
actually,
part of the
that's the
strategy.
one Mina sent out. Did everybody get that message on the portfolio management motion?
Yeah, and yeah, I think so. And I said I don't understand what you mean by a
Okay,
sector study.
we'll discuss that. Okay.
Okay.
First off, do we want to? We don't have to do it in this order. What order? I think though, since we have the John Catterson payout, and we're short, we need to talk about selling some stock.
How much money do we have right now?
Well, can I make another suggestion?
Sure.
We could. I don't know when we have to pay people out when they leave, but what we could do is, since I think Tom said we were short a little bit, but not a lot, we could just wait an extra month until we have, the amount, and then just pay him off then. Then you don't have to sell anything. That's one option. We could sell something.
I think
sure.
we have 2 months. I think that's what we decided.
I think there's was that in the Articles of Agreement? I think that okay, so do we want to review?
Can you show your screen? Because the audience only see the black screen.
Oh, I thought it was
maybe your agenda or whatever it is.
Okay, yeah. Sorry. Okay. Okay. So is that what we want to do, is wait till next month then for the John? Well, we have 2 months. So it's from when he gave his notice, right? Was that last month?
Mm-hmm.
Okay, so September we should decide, or we should give him his payout and starting in September. Reddy, are you okay with that? Is Reddy on?
He's muted, but
Reddy muted.
So we're not going to actually give him anything, right?
No, but it gets
we're going to
on the
remove.
accounting side.
We're just removing that money from the broker or whatever.
Right, from the portfolio.
So yeah, so that's fine.
Okay.
I don't think that.
Yeah, John, you asked me a question?
Yes, we're going to pay out John C. next month for October, where when you before after you've assigned the month
Oh, another month
contribution.
delay. Another month delay.
And actually, I think you just did 1,300. You based on 13 people. I think we actually have 15 people.
Oh, we have 15.
Yeah, in the club.
No,
Well, I'll talk to you later. I'll talk to you later about that. Okay.
Okay.
All right. So we're gonna delay that. Are there any motions on buy or sell based on our reports here?
Well, last month we agreed to pay off 1 month later, and this is 1 month today.
Okay.
So
Okay.
Another month.
Okay. So so with that, if we have 1,500, how much are we short?
A couple of hundred.
So if go ahead, Jay.
I'm wondering if we should trim Facebook a little bit. Should we trim Facebook, or we have a 15% Facebook?
And it's a large company?
Mm-hmm.
Yeah. How much can we trim?
Okay,
one share is
to bring
300
iCloud.
something, right? So one share is $300.
I think that will be enough for Henny.
Yeah.
Yeah, one share.
Do you want to give me the screen, Joanne? I've got iClub up. I can.
Well, you don't need the screen, right? You can just make the motion, right? Or do you want the screen?
No, he wants to see the portfolio so he can show people what it's like, right?
Oh, okay.
Yes.
Oh, sorry. Oh, sorry.
Yeah, John, you're right. Either we have to make a decision tonight, raise a couple $100, or delay another month. One of the two.
Can you see the screen, or because
Yes,
I've got two screens?
yes.
Okay. So Facebook, we have 30 shares, and they're at 363. So if we sold one share, we'd have enough money to pay out, and it's 14%, and then we also have
15%.
IIPR is 12.6%. So that's another one.
Okay. So I make a motion to sell one share of Facebook.
Okay, you have my vote.
You have what? You second?
You have my vote.
Okay.
Yeah, I mean, yeah, do it. You can do it on my iClub, but yeah, we can just go around. And if you want, I'll just do it right now. I don't need motions.
Yeah, communication is huge. Communication is 28%. I think we can dump some. Entertainment 13, utility.
You want to do more than one share?
I think we could.
But we don't want to dump it just because it's large, right? I mean, we want to have a reason for. I mean, Facebook's it's gonna do well.
I agree.
Okay, continue doing well.
It should
okay.
it should have a purpose. It should.
You know
Are
what?
we going to study this next month?
Yeah, we're going to study the sector anyway, so we can wait.
Yeah.
Let's wait.
Well, let's sell one share so that we can just pay.
Let's not share. We don't have to sell it because next month contribution we will have enough.
All right.
We will have $1,500 come in.
Okay.
So we don't have to sell it.
Okay. All right.
All right.
Okay.
Yeah, this way it keeps things simple. We can delay by 1 month, but we don't have to keep on postponing. And selling one share of FB, that's good. It solves the problem.
Yeah. Well, because it's Facebook, it is large, but then team is going to review that sector anyway next month.
Yeah, and it might be that it turns out we sell more next month. You know, so.
Yes. Okay.
Okay.
We can move on now, I suppose.
Okay. Let me take the screen. Okay, so Mina distributed the motion. Agree to do sector challenges to update and renew our existing portfolio instead of adding new stocks to the portfolio. based on the portfolio management recommendation. And that the recommendation is down here below. So it's actually, it's based on what, partially on what Hanny's been saying, is that we want to maintain or improve our total return, reduce or eliminate low growth stocks, maintain sector diversification, aim for size diversification. Is that what you're thinking, Hanny, as far as looking at the overall portfolio?
Yes, but in addition, like if the goal is to maintain a certain portfolio growth rate, say 15%, and you have Facebook that's like 15, 14% of the portfolio. If that stock grows, say, by 5%, if you look at the growth rate for all of the stocks together, based on their size or their allocation, we may not get enough stocks growing at 15% to get the whole portfolio there. So it's kind of hard. I'm having trouble explaining it, but you have to look at the growth rate and the percentage allocation of each stock in the portfolio.
Okay. And just keep in mind that the large stocks won't necessarily, or large companies won't necessarily have a 15% growth rate. So we're looking at a total, a total return of 15%. I mean, that's why the balance is more medium and small compared to the large, so that we have a opportunity for more growth.
Aggregate or average amount is in that range, not individual ones.
Right. Okay, and so did everybody get a chance to review this, I hope? Or do you want to go through it all now?
It's a long list, Joanne. I had to go through.
Okay, well, I guess the recommendation is to do sector challenges, and Tom has identified, so the challenge sectors would be somewhat in this order, that we would do communication services, because Comcast and Disney are low growth, and there's a potential to reduce the large companies portion of the portfolio on that sector. And then eBay is a low growth stock. Actually, I think Bernard has a difference with this, with the FAF, that's also a low growth stock. And then we would look at technology, healthcare, and then gold, REIT, and utilities. We've completed the watch list, and we're basing it on manifest quality, having a high quality and a high PAR, 15% or above, with a focus on medium and small size companies. So these would be companies that we could look at when there's an opportunity to spend money or to purchase stocks. So that's.
I have a comment on that, Joanne.
Yes.
I think the last month or a month before, Haney agreed with my idea. We should spend a little bit time during each monthly meeting on anybody sharing their homework on watch stocks. We should always go through watch list and see what are the promising ones, in case we need to replace the existing ones, the opportunity.
Okay. Yeah, we have a watch list currently. We trimmed it down. It was a lot of stocks from like 2016. We went through it very carefully and only picked the high quality ones with a PAR of 15% or above, and we came up with 2. So, I mean, I don't know what do you mean by
What were they?
Which 2 were those?
TDD?
Which 2 stocks are on the watch list?
Let's see. Let me see if I can bring it up.
Only 2? What are they?
Yeah.
That's what we're trying to get at.
Can you see my screen?
Yes.
Oh, LCI and TDD. Okay.
Yeah. And LCI has been proposed several times. So, and they
got to be. They have. Yeah, they have to be doing pretty well right now.
And actually, another criteria was that they have to be a medium or small company. So we pared it down to quality, par, and size. Okay.
So who's gonna watch these actually?
That's a good question. Is it like the person that wants to, that initially proposes it? I mean, because you should do an SSG before you propose a stock and possibly do a first cut. So that I'm assuming that the person that proposes it on the watch list would keep an eye on it.
I'm working on the first cut for TTD.
Okay.
I'm more than halfway done.
Okay.
I just want to give the reasoning why I gave the piece. I think I also have the first cut as well.
Okay. All right. Okay, so let's go back to, so this is the motion. Agree to do sector challenges to update and renew our existing portfolio instead of adding new stocks to the portfolio based on our recommendation here. And I think, Hanny, you had brought up that you wanted to not continue to add new stocks because of the limited number of people that we have, that we want to keep it so that it's one stock per person. Is that correct?
Yes.
Okay, so that would help manage that too.
I didn't mean to say that we shouldn't look at new stocks. It's just that if we're going to add something, then we should remove something. So
right.
pick the weakest stocks, get rid of them, and then add new ones.
We also need to look at sector diversification and size diversification when we. So there's many things we need to do besides replacing one stock with another stock. We need to make sure, like you were saying, that it keeps the portfolio in balance.
I think the motion needs to be revised though, because what's the point in having a watch list if we're not going to add? We should, like Hanny said, let's replace. We don't have to add, but we can replace an existing stock with a new stock, right? Whereas the motion reads a little bit different.
Well, the motion is intended to keep the portfolio in balance. If you just add a new stock and replace it, with an old stock without keeping in mind the sector diversification, the size, and the return, I mean, you need to keep all that in mind. I mean, so that's the watch list is intended for if you have a sector that you're addressing, that you would look at that that particular, or the stocks that are in that sector in the watch list.
Okay, yeah, it just that wasn't clear.
Okay.
In the motion.
I want Haley to just confirm me. Annie, you are thinking that we should keep the total number of stocks in the portfolio around 15, 16. Is that what it is?
Yes.
Okay.
So when we do the portfolio analysis or the portfolio report each month, there's if you rank the stocks from the strongest to the weakest, right? There may be like the bottom three, they're not growing very fast, they're going sideways, what have you. You can do a stock study and replace those with something better.
But that's within
keeping your total number of stocks the same, right?
But would it be challenging that sector? I mean, when you.
Well, if there is, but if there isn't, then we might have to look at picking something that is not from that sector. If it just depends. If there's something from that sector, that should be the first priority. But if it's nothing available, then
yeah, I mean something could happen where a sector becomes profitable.
Yeah.
The pandemic or something happens, or legislation.
You don't necessarily have to have like all of the sectors represented, but you should have a good number of them representative. If it's not possible to have, you know, stock from each sector, there's nothing wrong with having just a few sectors.
Tom Loftus.
Keep in mind that sectors also rotate depending on the economy, right? So,
Tom Loftus, can you give your insight on this? I think it was your suggestion about the sector challenge. Are you there, Tom?
So we developed the same. What I would like to do is okay.
I can hear
Can you
him.
guys? Can you hear me?
Yeah, we can hear you.
Joanne, your earphones might be maybe cutting out.
Oh yeah, they are. Sorry. Sorry.
Hanny,
Okay.
before you answer Tom's question, how many stocks we should have in our portfolio, maximum limit?
One per person.
Well, I would say one per because keep in mind you have to review your own stock, you have to do the peer review, and then as we develop a watch list, we might each have to do something on the watch list. So, you know, that's 3 stocks. That's quite a bit of work if you do it properly.
Can you guys hear me now?
Yes.
Mhm.
Okay. What I was going to suggest is, like, I think we have the spirit of the, you know, everybody has the same sort of idea. We've got maybe different words or different sort of thing together, but like, what if could we try and look at the communication sector, and that would, you know, with Comcast, Disney, and Facebook, which would mean Hanny, Matt, and Megumi, and myself, and I guess Jay and Joanne, to go over this sector and see if we can look for the best stocks in that sector. Put those stocks up to a challenge, or in the discussion, maybe Hanny will persuade us there's another way to do it. But the idea, I think we all have the idea, the spirit of it is try and improve the portfolio. This is one way to do it that Jay and Joanne and I come up with, and we wrote all the things there. I think, you know, you probably agree with some of the things, but there may be a slightly different way of doing it. But would like Hanny, I think you're available, or
yes.
Like Matt and Megumi, would you be okay to join the team? And
Yeah, except I'm out of I'm not available the 2nd through the 13th. I'm traveling of September.
yeah, well, I think, well, I have sort of some issues with next week, but I think if we can agree to try and meet and discuss, maybe Hanny and I could talk about it initially and crisp up a format to review it.
Sure. I'm curious, what is, like, how well is our sector doing, that sector doing in terms
Well,
of
that's what you know, the session
that's
is.
what you, okay, gotcha. Okay. Yeah, that sounds like a good idea.
What about Matt? Are you okay, Matt, with that?
Is Matt here?
If you made it.
What exactly am I being okay with again?
To join a study on the communication sector next month.
Because Disney's part of
Evaluate it.
I guess so. I mean, I was going to do my normal update, but I guess just let me know if there's more that I need to do.
Well, if we're going to do a challenge against, you know, with Comcast, Facebook, and Disney, we'd like the stock mentors to be there to you know, present their ideas. They know those companies the best, and they have the best information on it.
Yeah, I guess I don't really understand what's happening, because like we own some, and then we're going to present some we don't own. So will it be like simultaneous, or like if Disney's a hold, do we sell it in lieu of something else, or do we still hold it? I'm not really clear on what's being proposed.
Well, again, that's the purpose of the study, is to try and and resolve that. With Comcast and Disney, what do we, what do we expect from them? And, or, in this first meeting, because of some of the things that Hanny's talked about, maybe we want to look more globally. But I think the idea is to try and improve the portfolio, and maybe we're looking in the wrong area. We picked this area because of it's the biggest sector. It also has some big companies.
And we're too big on the large companies, right?
Right.
But it could turn out after the study that everything stays the same in that sector. Just don't know. Correct?
Yeah, I guess so. But I guess, again, hopefully we come up with a strategy of how we can improve the portfolio. That's the objective.
Okay.
Okay.
I guess, I think it just needs a little more definition. I'm still just kind of unclear on.
Okay, but did you read the letter that Minnie sent you?
Yeah, no, I read it.
Okay. Okay.
I mean,
well, it may not be sell it. Maybe sell it down to bring it to 48, or if we don't,
okay.
But that's what the study's for. I don't think we can solve it tonight.
All right.
So it's Joanne, I think we seem to have agreement that we could go ahead and do that. Yeah, are you happy with that, Joanne?
Yes, I'm happy with it. Does anybody else have concerns? Do we want to vote on this? I think I made a motion and Reddy seconded it.
Did you send something out, Joanne, or did you just want to?
Did you see? Oh, you want me to? I thought you were.
No. If you didn't, that's fine.
I can do it.
No, whatever. We can just vote on it verbally. That's fine. I'm okay with it.
We should do a record of it. We should.
Okay.
I can do it. I'll just cut and paste it from the Mina's message here. And you have it's till the
You might want, yeah.
Majority reached, right?
Yes.
Okay. Okay, that's for me later. Okay. So that was this part. So we're not buying or selling any stocks. We're waiting for next month to do the John Catterson payout, and then vote.
Hold on, John.
Yes.
I thought we are selling one share of Facebook to pay off John Catterson.
No, they want to wait till. Is that correct? That we want to wait till next month?
Yes.
Okay.
Yes.
And then that needs another motion that how long we can delay outgoing member.
Okay.
We said 2 months.
2 months.
It's fine to pay him.
Okay.
Do you want the motion that to be a motion ready?
Yes.
It was a motion. I remember we already discussed last time.
At the last meeting.
Discuss 1 month motion, not a 2 month
2
motion.
months.
Okay.
Okay, I could be wrong.
No, I remember 2 months.
We don't have there wasn't a motion last.
Okay.
There was
should be in the minutes. Whatever the motion we passed, formality is, it should be in the minutes. So I can follow or anybody can follow.
If you don't find it,
there was no motion. So let's do should we just?
We discussed, I remember.
Okay. Do you want to do a? a motion?
Sure.
Payout.
Outgoing members should be paid out within 2 months of the departure.
Notification is within 2 months.
Departing member payout.
From the departure date.
Oh, not from notification date?
No. I think officially departure date has to be during the official meeting like today. His departure is accepted. Okay, and that is the official departure date.
Okay, is this right?
Departure date. What's the difference between what's departure date? I don't understand. How
Departure
do you
date.
define departure date?
Departure date is being agreed on during the duly convened meeting of the club every month.
Wait, so if let's just say I want to leave the club, and the club said, no, you cannot leave. So is that what you're saying?
No.
No,
If
What do you
somebody
mean?
called,
Somebody say notify.
somebody called Joanne is leaving today,
Uh-huh.
how does the rest of the club know?
Yeah.
Officially take a position, okay, and follow through.
Yeah,
Right?
basically what Reddy's saying is that you have to make some sort of announcement at a formal
At the
meeting.
club. Oh, gotcha.
At a club
Okay.
meeting, right?
Okay.
So
Okay.
that's the departure date.
So maybe
Okay.
that's an announcement date.
Announcement date.
Announcement date is like if someone calls you, Joanne or Jay, and said, I would like to leave, you know, let me leave. Okay, fine. But then the next meeting, you have to announce that and say so and so decided to leave, and that would become the departure date at a normal meeting, right? So
It's like it's within.
A formal announcement date, and then followed by a formal payoff date.
Departing
notified by the club. Maybe just say within 2 months of announced the departure date.
Club announced departure date.
speaking of departure,
What? Can somebody just clarify this, how it should be stated?
John, I'm not a language major, but announcement date, departure date, and payoff date. Okay.
Speaking of departure,
within 2 months
to leave.
Okay, within 2 months after announced at the club. Yeah.
Yeah.
Club announced departure date.
After being announced at the club meeting or something.
You gotta
It's
tell.
it's like, yeah, it's by the second meeting following.
It's the next meeting.
Yeah,
within
it's
2
within
months.
2 months after being announced at the club meeting. After being announced, right? 2 months starting after being announced.
But not 2 months. It's the second meeting. It's the second meeting. It has to be at the second meeting, right? Not just 2 months.
Within 2 months. Within 2 months. It's not exactly. If we want to do it sooner, we can do it sooner. If we have the money, we'll do it sooner. But so it's within 2 months of the announced departure date at the club meeting.
Yeah, at the club meeting. That's good.
Because when we take a payoff, for example, current situation, okay, we don't have enough money, okay, treasury is on fire. We have the duly convened meeting only, we can take the decision, and the decision raises enough money to pay off.
Yeah, the departing member payment is within 2 months of the announced departure date at the club meeting. So say somebody announces it today, or say they announced it last week. If we bring it up at the club meeting today, and then we have 2 months to pay it out.
Yeah.
Does today count as one meeting?
Yeah.
Okay.
Yeah.
So it's like the second meeting.
Well, it doesn't have to be second meeting. It's within 2 months.
2 months.
So it can be sooner. It can be within a week. I mean, if we have the money, we'll pay them out then.
Okay. Motion made by Joanne, please.
Okay.
Announcement date can be 6 months before, but I'm leaving 6 months from now.
Yeah. Okay.
The
Who's that seconding?
Ready.
Okay.
Okay, I'm listening.
Okay. All right. So we have one more item to go through, and that's the amendments to the Articles of Agreement. Did everybody get those?
Yep.
Okay. So the first one is that we invested $100 per person versus the $1,000 a month. Go ahead, Reddy.
No, I'm sorry. I have a guest here. I'm talking.
Okay. So we're going to change this because it it was 1 month. So we're going to say will occur within 2 months. Occur.
Yeah, now you can see the problem.
I can't
Joanne.
edit this. Is this, oh. Okay. We'll have to redo this. Okay. Will occur within 2 months. After formal membership withdrawal from the club during the next monthly scheduled meeting. That's correct. Payoff amount will be from, we're not going to do the, oh yeah, will be from the club's broker account. So I guess we'll leave this as an option. If enough money is not available in the broker's account, club members will decide to raise the required additional amount beyond the money available in the broker account by selling stocks from the current portfolio. Okay. We don't really need this explanation, but we'll leave it in there. And then duties of a member: participate in a minimum of 2 stock studies or education topics a year. So you can do either 2 stock studies, 2 education topics, or a combination of 1 stock study, 1 education topic a year. So that's the proposed amendments. Do we want to vote on that? Any comments? Oops.
Joanne,
Yes.
to be honest, I'm not familiar with all the background of education topics.
Yeah, I feel like it's
I
a lot.
just did a 5-minute. I mean, you can do a 5-minute piece on whatever, on an SSG, or the definition of something. It doesn't have to be a full on cash. Somebody can somebody unmute Narinda? She's muted and I can't unmute her. Yeah, so you just pick you can do a 5-minute education piece. Okay, I think she's okay. Oh, you're
okay.
unmuted, Narinda. So is that okay? I mean, do you have concerns about doing education?
Honestly, I'm worried about the time commitment. If we have to come up with
I can help you.
We come up with our own topics?
Yeah.
Okay.
Yeah.
Well, I'm saying that's even harder.
What? Pardon me?
I said coming up with your own education or topic or stock study is harder than,
I can help
right
you.
now.
Yeah, I'll help you. Yeah, I can come think of easy ones for you. Okay. So can we post that as to vote on that, or do we want to still wait? I mean, I'm sending things out early so that people can review it, but it sounds like you need more discussion during the meeting. It doesn't seem efficient.
I mean, we can vote on it.
Okay.
Yeah.
based on 888 email. Okay, I'll do the motion.
You need to make a correction.
Yes. What's the correction?
Based.
Oh, thank you.
Go back to the motion.
You don't like that? What's Bay? Before anyone else? Nobody that gets it, huh? BA. Okay, based on.
Based
Okay.
on.
Okay, who wants to? Is anybody want to second it?
I will.
Okay, that's Narinda.
Mm-hmm.
Uh-oh, Narinda's not on here. Hanny, we need to have her.
I can add it. I can add it.
Yeah, add her on there and take off John Catterson.
Okay.
I have one comment on that, Joanne.
Yes.
I'm not sure what, I would like to know Haney's opinion on that. We should invite all the BI officials and the experts for those kind of presentations, experts presentations. Then if the gap remains, we should fill up within our club.
I don't know what you're talking about. What are you referring to?
Like guest speakers?
Guest speaker from more experienced investors, so that if we don't have those guest speaker, we will fill up the gap ourselves.
Oh, instead of doing education topics?
Yes,
Yeah.
education.
Okay.
I attended 3-4 other clubs. They invite BI officials and other experts. They are treated as those topics, special topics. And those
Okay.
are nice.
Okay, then I want people to give me suggestions on how to get members more involved with the club.
Is Annie still there? Annie?
I think he left. He had to leave.
Okay.
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 Okay, somebody else is going to have to second it because Narinda's not in the system yet.
No, it's already in.
Well, I don't see
You
it.
need to refresh.
Okay.
Uh-oh, shoot.
Narinda, let's see. Yeah, I added her. Oh, I need to put the join date.
Okay, all right. I think we're
okay.
done.
Join. Is this the last thing?
Yeah.
Okay,
Yeah,
good. 1 minute.
Yeah.
I think our guest's very patient.
Yeah, okay, all right. Yes, thank you, guest. Sorry about that. Okay, so I'm going to stop the recording. The meeting is adjourned.